Hey guys, Christos here and welcome back for another video, and today we are talking about what is on the screen right here in front of me, and that is my stocks are crashing. What should I do next? So if you didn't know and if you're not following the market, the day's date is the 11th of May 2021 and we are currently experiencing double days where the S&P 500 has been down 2 days in a row by a considerable amount. There has been some massive tech stock sell-offs. A lot of stocks that I'm investing in has crashed quite a bit over the past week. And what I'm going to do is share a couple of those in a moment. So just looking at my portfolios, this is my individual stocks portfolio. There isn't much money in there at the moment, but it's down 6.21% in the last week. Looking at my ISA, where I've got some index funds and I've got some individual stocks as well, we're currently down 2.32%. I believe that is just today, which is quite a large dip, and that's up to a £500 loss, so not having the best day at the moment. Just a couple of the individual stocks that I invest in. Tattoo Chef, which I actually made a video about literally yesterday, that is 7.3% down for the week, so a massive drop in that. I believe I invested in it when it was around $17.73. I bought a little bit more when it dropped the first time, and it's dropped even more since then, so that's had a bit of a sell-off. Walt Disney is down for the week. All of my stocks are down for the week. I'm not going to go into them, but what I am going to go into today is what I normally do when things like this happen. So when the stock market crashes a little bit, I wouldn't go as far as calling it a crash, but when the stock market takes a little bit of a step back, what am I doing with my investments? Am I panic selling, or am I buying more, or am I just sitting there and holding? So let's get into that right now. And there's two things that I have done today, and that is number one, increased my index fund position. So with index funds, I am not worried about the price now. I am thinking about the price in 10 years, 15 years time. There is no point in me worrying about the ups and downs of an index fund. However, when I do see my index funds dropping over a 2 or 3 day period, that very much tempts me just to load up some money that I was going to invest in it anyway, just at a sale price. So that's exactly what I did today. I put in £843.26 into my VUSA index fund. Like I said, do not care about the price. All I'm doing is simply just investing into it now with the mindset of the future, and I've just taken the opportunity while it is a little bit down at this current time. It's not going to make much difference in the future, like I said. But one thing I did want to show you guys is the lifetime chart of this index fund. So the reason why I say there should be zero thought required for long-term investors with index funds, and why I do not think about it, is looking at this chart right here. This is the all-time chart for VUSA. It's a Vanguard index fund, and as you can see, throughout the years, it's had its ups, it's had its downs, but really it's just gone up the whole way. As you can see, it started off around just under $20. It's now sitting at around $55, I believe. But as you can see here, this is the small little dip in the market that we're experiencing right now over the past 2 days. This means absolutely nothing for the future. What you can see here is the one with the pandemic. Obviously, that was a lot more of a sharper dip. One thing I did then was I loaded up completely around that point. I think I bought some around here when it was halfway down. I bought some more when it was at the peak, or at the bottom, sorry, and I bought some going up as well. But what you can see, the general trend over a long period of time is this is always going up. So you shouldn't really be thinking about the price when just investing into index funds, but if you see an opportunity, why not go for it now? The second thing that I did was I increased individual positions on good reporting stocks. So what do I mean by this? Number one, what I mean by this is I am investing and increasing my positions in stocks where they have gone down, but there has been nothing other than the general market consensus as to a reason why that stock has gone down. There's been no news about the stock. For example, obviously, Peloton has had some really bad press, rightly so, as of late. That's caused the stock to go down quite a lot. But the stocks that I'm holding right now, there's been no bad press about them at all. It's just been a general market thing. So my beliefs and my fundamentals in that stock hasn't changed. And all I am doing is this thing here. I'm simply just looking to get that stock on sale. And there's no better example to use than Facebook, for example. So if we go just back 2 weeks, Facebook earnings just completely obliterated expectations. And as you can see, I've marked here on this picture the point just before earnings. And as you can see, what happened as soon as they reported their earnings, of rightly so as well, Facebook shot up in stock price. And the first thing that I sat there and thought about was I actually got FOMO. I thought I should have invested more into Facebook. And what has happened now, and this isn't because of Facebook, this is because of the market, we have now dropped down even lower to the point before they even reported their earnings. So if you were sitting there thinking you had done your research on Facebook, you believe in the business, you believe in the fundamentals, what an opportunity to now go and invest in Facebook. We've just reset our price, but also with those great earnings reported as well. So we know the business is doing well. It's just the general market consensus at the moment is on the downrise. So what a great opportunity to get this stock in at a sale price. Now, the next thing I want to talk about is Tattoo Chef. So like I mentioned at the start of the video, I made a video on Tattoo Chef literally 1 day ago, telling everyone to go and buy it now. It's going to shoot up in the future. It's going to be a massive stock in the long run. Of course, in the last week, we've seen a massive drop in Tattoo Chef. So when I made that video, I believe the price was $17.48. We're now down to 16.7%, which is about a 3 or 4% drop, I believe, maybe even a little bit more. But nothing has happened with the stock. Nothing has come out from Tattoo Chef. Like I said in that video, we do have our earnings out later today, actually, by the time you're watching this video, if you're watching it on the day that I release it. Other than that, there is nothing to make me concerned about this stock as to why it has dropped that much. And for me, the more it has dropped, it's just presenting such a big buying opportunity. So I'm just using this one as an example. We're currently at $16.70. This is a really attractive price for me right now. I fully believed in the stock when it was around $17.50, $18. I'm going to believe in it even more when that price drops even below. Let's say if it even went down to 15, then that is the point where I'm really going to be focusing on potentially loading up even more on this stock. So that is two things that I have been doing today, whilst there has been a double day kind of run where the S&P 500 and the American stocks, especially the tech stocks, have dropped massively. Just to give you a couple of tips when it comes to kind of buying the dip. Number one, when you see your stocks drop in price, remember, do not panic, do not pay attention to the short-term movements of a stock. If anything, this is an opportunity for you guys. If you are long-term investors that you fully believe in that company, it's an opportunity to pick that stock up at a sale price. The next thing that you should probably think about is dollar cost averaging your investments, maybe over a short period of time. Simply just going back to the results of the pandemic back here, when it first dropped, the first thing that I wanted to do was I wanted to completely load up on this stock. And I did, and it didn't leave me that much money to load up even more when the stock dropped even further. So one thing that I say to do is maybe buy a little bit on the first day and then maybe see what happens with the stock the next day. But this way you're going to dollar cost average it and just limit your risk a little bit more. And then the other thing is, like I said, is to pay little attention to the price of these stocks if it is market related. Of course, if there was some bad news that came out about the company you're investing in, then it's something that you should maybe look into, but potentially not be too worried about. Obviously, I can't go into that one too much simply because every stock is different and I never know what news is going to come out. But if it is market related and all the other stocks are down, I would pay very, very little attention. Stick to your fundamentals and your analysis of that stock, whether you believe in it for the long term, and just pay little attention to those small little market movements. So yeah, that is pretty much this video today. I hope that gave you a little bit of value and maybe even put you a little bit at ease during this small market downturn at the moment. What is going to happen in the future? I don't know. Nobody knows. So that is the beauty of investing. Just one more thing to mention before I go, and that is for UK viewers to make sure you go to the link in my description and sign up for FreeTrade, where if you deposit £1 on the platform, you get a free stock worth anything between £3 and £200. As you can see here, make sure you do that. It's pretty much free money. And I have had some people come back lately and say they got stocks that are worth about £60 or £70. So that was really good as well. So make sure you go and do that. Of course, like and subscribe to the channel if you found any of this useful, and I will catch you guys tomorrow. Take care.